To you as soon as we hear what they are. Let's get reaction to all this from Larry Shover. He's Chief Investment Officer at SFG Alternatives. He's in the pits at the CME. Larry, I want to talk about individual stocks, what happened to BlackBerry today and what's happening to Qualcomm, what might happen to Facebook. But first, the GDP numbers in general. They were extremely disappointing. A lot of people didn't realize we were in negative numbers in the last quarter of last year. A lot of this is kind of an anomaly dealing with a hurricane, et cetera, but doesn't slow growth threaten the stock market eventually?
Yeah, it absolutely does. And David, you said it correctly. If you X out Hurricane Sandy and business inventories, defense spending cutting, we're up about 2.5% in GDP. That is still stall speed growth. I mean, it says we're growing, but we're growing at a stall speed. We need growth to be much higher. We need growth metrics to be much higher for the stock market to be lifted from where we are today to perhaps the next level, which would be 1570, 1600. We need GDP at least 3.5%, 4%. We don't see that happening anytime soon. But to your point, we do need it to happen.
Well, one of the things that suffered was video game sales, as people didn't have enough money and they were worried about it. Electronic Arts numbers are out right now. Adam.
Kind of a mixed result here. Earnings, they beat, Liz, 57 cents. The street was expecting 56 cents, but revenue fell short, 1.18 billion. The street was expecting 1.29 billion. In a statement from the CEO, despite a challenging quarter, we were able to deliver non-GAAP EPS at the high end of our guidance range. And then he goes on to say, we're investing for the future wave of growth that we foresee in digital and console. Liz?
Yeah, remember, they went big on some of the social gaming and kind of diluted what Zynga had a lock on with the Sims games and all kinds of things that Electronic Arts was really, really doing well with. Let me go back to Larry Shover. And Larry, look, I mean, the market held up pretty well when GDP showed to grow less than expected. In fact, it shrank 0.1%. So let's really get to what the trade is here. The Fed, as it said today, is still all in with helping and pumping up this market with whatever it is. Why isn't the trade then to get out of treasuries and go into equities?
Well, I think right now, the fact is we are growing. We're growing at a stall speed, and it's something that economists call financial repression. I mean, when they continue to buy $85 billion worth of assets every month, it causes people like me and everybody else to get out on the risk curve and to buy stocks and realize that, hey, treasuries really aren't that safe, considering that a 15 bip, 20 bip move erases all your profit for the year. So you're better off getting into a dividend stock. And that's the whole thing, why the stock market continues to be so robust, even though numbers like GDP come out pretty lackluster by and large.
But Larry, we did see a pullback in Amazon. Anyway, yesterday after hours, it was up at one point, a double digit, came back. Today, to a much more earthly level. It sort of leveled out a little bit. It was still had a nice gain. But is there a sense of rationality working its way into the market zealots now?
Yeah, there is some rationale. I mean, right now, the past couple of weeks, you've just had weak hands selling, and then you have the plain vanilla buyers, the big buyers buying on any weakness. Right now, that seems to be changing a little bit. We're seeing correlations continue to drop. That's actually a smart thing that needs to happen in some type of rally that we're seeing. But we are seeing some people take some money off the table and just wait for the earnings season to flush itself out to see where they're going to reallocate their assets.
Well, we'll be watching for yet another earnings report in a minute from Facebook, just moments away. We'll get it to you the second it comes out. So let's bring in Victor Anthony for a preview. He's the senior analyst at Topeka Capital Markets. And David and I have been sitting here waiting to see that everybody keeps saying, and rightly so, of course, mobile monetization, meaning making money off mobile because more and more people are accessing Facebook off that. Is that what you're looking for? Is there something else as a second choice?
Yeah, so there are multiple things. The first thing is obviously mobile monetization, because usage is shifting off of desktop onto mobile. So investors, including myself, will be looking for the level of monetization with regards to mobile. I'm estimating that roughly 24% of advertising revenues will come from mobile this quarter, up from 14% in the third quarter. I'll also be looking for the level of engagement on the site. There's been concern on Facebook of user fatigue. So I'll be looking for whether or not, daily active users as a percent of monthly active users whether or not that's trending up or trending down. So that's the second level I'll be looking for.
Victor, stay with us. The numbers just came out. We're just going through them. If we can put up the bid after hours and the various. It is a little lower. Let's go to Adam Shapiro. Go ahead, Adam.
Yeah, earnings per share came in at 17 cents, David. The street was expecting 15 cents. Revenue, $1.59 billion. The street was expecting $1.53 billion. They're talking about, in the report, mobile revenue represented approximately 23% of advertising revenue for the fourth quarter of 2012, up from approximately 14% of advertising revenue in the third quarter of 2012. You heard Shabani say mobile. Right. 23% is the figure.
Okay, well, we want to go to the CME, but first I want to go back to Victor Anthony for a second. Victor, it missed on that number, that key number that you just mentioned. It got 23% of total ad sales in mobile. That's enough to send it down after hours. Is that a disappointment to you?
No, it's not. I mean, I was looking for 23.8%. It came in at 23%, but I'm just looking for really the sequential growth, and it looks like that sequential growth was ahead of what I was looking for.
But it is surprising. Look at how it's down now. We're down about $3 on the stock. That's a pretty significant loss after hours.
Yeah, I'll have to go through the details of it to see what really concerns investors, because the top line number in terms of revenues beat, EPS beat, so the headline numbers are pretty good.
Well, let me get to Larry Shover here as you look more at that. And Larry, they matched the Whisper number of 17 cents. I know the street was looking for 15 cents, but that's not bad for little Facebook that's been embattled. Not little, it's huge, but to be so embattled in its birth as an IPO, and then after that, and suddenly it's done pretty well over the past couple of weeks.
Yeah, and I was listening to Fox about a half an hour ago, but it had to be a beat. We needed like 19 cents and over 1.6 in revenue, especially on the revenue side. We need to see a really big beat for the stock to go higher. I mean, fundamentally, it's a great company. Great things. They're throwing a lot of things against the wall. Something will stick. If it's down $3 right now and you like the company long term like I do, a great time to get in right now.
Well, ironically, this is about the level that many people say it should have started at, right, Larry? About 31, between 28 and 31?
Right, and it's all the noise is over with now. All the lockup have expired. Now we're down to business. The graph search is something in its infancy, but just imagine just the possibilities with being able to search, granular details on all your friends. I mean, this is a great thing, and ad revenue is going to go up. Mobile. If it would have hit over 1.6, we would have seen the stock rise. It didn't. That's why it's reprieved a little bit. A good time to get in.
Okay, and remember, these things can moderate a bit, but at the first blush, down 10% for the stock at the, and then it's moderating. But let me get back to Victor Anthony. The engagement numbers, meaning how many people are actually jumping on and using their Facebook page. Have you seen anything that scares you or that encourages you?